raised your S&P price target. Your new price target is 57.50, implying about an 8% increase for the broader market. It's pretty bullish. Of the companies that we track, 5,500 is the highest, so you're considerably higher than them. What are you seeing? What's going on?
Well, we actually think our target's probably wrong, but too low.
Too low?
Yes, and the reason for it really is what most people don't appreciate. Well, first of all, it's really the year of global rate cuts. And you can see that in the futures market. The average OECD country has 100 basis points of cuts built into that. And what a lot of people don't understand is that to lower rates, central banks have to inject liquidity. And that's really what we saw in 2020 and 21. That's really what drives stocks and bond markets.
So you just gave us your WEX word of the day. Your WEX word of the day today is liquidity. And part of your argument is that this year, in 2024, we're going to see $2 trillion, that's trillion with a T, of global liquidity in the global money supply. What impact does that have on the markets? Is that one of the catalysts for you raising the S&P price target?
That's really the critical catalyst.
Yeah.
So we got bullish on the stock market in early 2020 because of that huge injection. The global monetary base went up 32% during 2020. So that's really what drives stock and bond markets. That's what drove the market lower. In 22, the global money supply dropped by 6%. So investors should really track that. You can get that on our website. We're the only ones who add it all together for you.
All right. I want to get to some of your picks. You actually have some picks when it comes to the financial sector, but I do want to bounce something off you. Goldman out with a note today saying that revenues for big U.S. banks are going to be down 2%. Also going to see some margin pressure. So why is the time to invest in big U.S. banks?
Well, actually, we would avoid regional banks and banks that have big exposure to net interest margin. So we're really focused on the investment banks that benefit from underwriting and the bull market that we're expecting. We've already seen that. We saw the Reddit IPO. So we would avoid any banks with net interest margin or significant net interest margin. And we're focusing more on the pure investment banks like Morgan Stanley, Goldman Sachs are our biggest holdings in ICAP, or in the small cap fund, SCAP, we have Jefferies. So we think they'll beat the other banks. And we do agree with Goldman that normal banking business will be under pressure because of rate cuts.
All right, so your two picks are based on the investment bank situation. You feel kind of encouraged by the Reddit IPO. I would imagine Astera Labs also pretty encouraging.
Right.
Are there other IPOs that you see coming down the pike that'll be successful? They're going to give a boost to those businesses?
We do. Well, if we are correct about a summer power rally, then you're going to have a heat up in the calendar. There's a big backlog. And you'll even have some of the startups that are just now starting come public later this year and next year. Mm-hmm. So, but not only that, there's already a boom in fixed income underwriting and a slight pickup in M&A as well.
All right, before we let you go, we've got to talk about one other area outside of equities. Gold hitting a record high on Thursday. Looks like it's going to continue to reach new highs today. What's your view on gold and the investability right now?
Well, gold usually does well when the dollar's weak and the bond market's rallying. But right now, there's a lot of demand out of China. I think a little bit of a safe haven in China. They restrict cryptocurrency trading. So we would be bullish, though, because we're forecasting the U.S. 10-year goes down below 350, so that would be bullish for gold.